Hello, everyone. Thank you very much for joining us for this Wednesday's Nasdaq Dorsey Wright podcast on Wednesday, June 24th. My name is Ian Saunders and joined this week by Eric McCardle. And coming in this Wednesday to a little bit of a downwards move for most of the major domestic equity indices. Taking a look here at the chart page of the S&P 500, ticker SPX, and we're looking at the 20-point chart as we typically do. As we typically have been, at least over the past several weeks with this market movement that we've seen. And on that 20-point chart, we have the index that moved to a buy signal a couple weeks ago there on June 16th at a chart level of 3,100. Seen a little bit of back and forth movement over the subsequent trading days over the last couple weeks. Reversed back up into a column of X's yesterday at 3140. And then with today's move, at least through with the big movement, downwards movement that we saw in the morning, seeing a reversal down into a column of O's, giving us a sell signal at 3060 before falling there to the chart level of 3040 on the chart. And so while this is a reversal down in O's, while it is a sell signal on this 20-point chart, it is actually, interestingly enough, setting up what we would call a shakeout pattern, one of the more infrequently seen patterns, at least for the major domestic equity indices here. But nonetheless, we see with this move today setting up that shakeout pattern. And so by a quick definition, a shakeout pattern is going to be anytime a security or an index in this case reaches a double top formation, but does not actually break through that formation. So it forms a double top, reverses down into a column of O's to give a quick sell signal to shake out those that are bearish on the security or the index in this case, as it may be. And then the buy point on that pattern would actually be the subsequent reversal back up into a column of X's, which from current levels would occur at 3,100 again there for the S&P. So relatively interesting movement to see this going on for the broader index in and of itself. From current levels, if we did not get that reversal up, we would be looking towards further support at 2980 that we reached earlier this month. And then from there down at the 2780 and 2740 support levels that we saw there in April and May. The shakeout pattern would actually be completed if we did get that reversal up with a triple top break, which would occur at 3160. So definitely some interesting movement that we see here going on for the broader index. And that has led us to take a look at some of the other securities, some other stocks specifically that might be showing some interesting movement themselves. In order to do that, there's a few different ways that you can go about viewing specific patterns on the Nasdaq Dorsey Wright platform. But one in particular is going to be using the pattern reports tool, which is going to be up top under the security selection, security screener tab. And then you'll notice there's going to be a pattern reports link over there on the left-hand side. This is going to bring you the opportunity to view a variety of different patterns that we have here on the platform, both looking at bullish patterns, such as a shakeout pattern that we mentioned there with the S&P 500, or bearish patterns as well, depending upon what you wanted to search through. So for the majority of the time today, we're going to highlight a couple different patterns that we think might be pertinent, given the recent movement we see going on in the market, as well as a couple ideas there. So as we jump into the pattern reports tool, initially you can see that there's a variety of different bullish patterns that you have the opportunity to choose from. One of those is the shakeout pattern, which such as the 20-point chart of the S&P is displaying here, or at least the potential shakeout pattern here today. Currently, there are 8 stocks that are qualifying as a shakeout pattern on that report right now. A variety of other ones that you might be able to use the potential shakeout pattern report for. But one of the ones in particular that we wanted to highlight that's showing a pretty nice shakeout pattern there is Palo Alto Networks Inc., ticker PANW on the platform. If you bring that up, you can see that the security is a 3-for-5er from an attribute perspective, showing a fair amount of upside movement, moving significantly higher after reaching a near-term low at 126 to most recently reach that, set up that double top at 240, but not quite break through. So earlier this month, it reversed back up in X's, set up a double top formation at that 240 point. And then subsequently, we got a reversal back down into a column of O's to give a quick sell signal at 220. But then with movement last week, actually on June 19th, we got that reversal back up into a column of X's at 232 to set up that buy point for a shakeout pattern there for PANW. So from here, in the similar fashion to the S&P 500, the shakeout pattern is going to be completed with the triple top break. This time we'd be coming into play at that 244 point. The nice thing about the shakeout pattern is that it gives you a pretty near-term support level with that reversal back up and exit. So for PANW, we get that initial support coming in at that sell signal at 220. Again, the pattern would be completed with that movement up to 244. So some other ideas there, and some more ideas that can be found on the potential shakeout pattern link. But there's another pattern that, given the market movement, has been seen a lot of names popping up with, showing a lot of consolidation across a lot of names with the volatility that we've seen. And that's going to be the bullish triangle pattern that Eric was going to highlight a couple things from here.
Yeah, Ian, and you mentioned volatility, right? And for most investors, that's not what they have in mind for, a positive outcome, right? It's generally, we try to avoid volatility whenever possible. However, if you're using technical analysis, or more specifically using point and figure charting, relying on volatility and relying on price movement to give us new data or new information is really, really crucial, right? And so when we have these periods of near-term volatility, like we've seen over the past 2 weeks in the domestic equity market, we're going to come across a number of what we call triangle patterns. And as you alluded to, in the intro, we're looking for at least 5 columns, and we need to have lower tops, so resistance moving lower, and higher bottoms or support moving higher. And if you think about this conceptually, right, as the name implies, you're just forming a triangle at a point where supply and demand ultimately are going to win a fight in either direction, right? And so in the case of a bullish triangle, demand would be the winner there. The outcome would be a buy signal, and that is generally considered a very bullish pattern from kind of a rare standpoint, right? We mentioned that the shakeout and the triangles are a little bit more infrequent than something like a double top, which would be your standard break. So of the potential bullish triangles today that we could pull from, we have 29 based on this stock screen. Also want to point out before we go into an actual example that when you're using this pattern report, as Ian mentioned, you can use the potential patterns, that link will be found at the top of the table, or alternatively, you can look at different investment vehicles. So if you wanted to look at ETFs or mutual funds or indices that are showing potential breakouts in such a rare fashion as we're looking at today, you can click the top drop down on the left-hand side and view those different investments and then populate them. But sticking with our list today of stocks that have moved to complete bullish triangles, one that stands out is Netflix. And this 3 for 5er returned to a positive trend back in the end of March, moved to a market RS buy signal at the end of March, and has marched higher ever since. And most recently, we saw that bullish triangle completed at 448 rather, so marking a second consecutive buy signal, and then ultimately culminating in yesterday's action, which moved the stock to a new all-time high at 472. So an interesting example of where that bullish triangle pattern yielded pretty favorable results right after occurring. So definitely something to keep in mind. Alternatively, you can look for bearish triangles to look for potential short opportunities or breakouts to the downside as well.
Certainly. And as Eric mentioned there, I mean, so for here with Netflix as the example, we see the downwards movement coming into play today for just the general price of the security, about down a little over 2% there. Not enough to lead it down to reverse down into a column of O's. So still seeing that new all-time high printed there on the chart at 472 for movement yesterday. So if you wanted to use these actually in your practice there's a couple different ways we mentioned as you could do so. One would be through the pattern reports tool from that screener tool, but you can actually use the pattern reports within a stock screen or another mutual fund or ETF screen that you already have set up. So one way to go about doing that would be to go actually into the stock screener tool. You can pick your different basket that you want to choose up top. Choose your different criteria that you may already have set up or that you wanted to designate here through the filters on the page. So for our example, for those of you who are listening and not following along via the video, we're just looking at names in the S&P 500. You can check off 3, 4s, and 5s the same way you normally would in another screen. And then you'll notice down there under the trend chart header in the gray box on the right-hand side that you do have the opportunity to choose from different patterns. All the bullish and bearish patterns are going to be lumped together here in this drop down, but you have the opportunity to come in and pick out different areas. So, for example, within the S&P 500, there are 10 bullish triangle formations right now that have a tech attribute of 3, 4, and 5. So very quick way to come in and use those patterns in conjunction with some other filters that you might want to apply here on the site. One of the couple different ways that you can look to get at those patterns here on the platform. So always no shortage of opportunities and in places to go and how to bring up those ideas that you're looking for there.
Yeah, that's right, Ian. So just a different way to crack a nut, so to speak. And that's one of the beauties of the platform, is that there's so many different ways to find idea generation and to identify both, near-term absolute strength and long-term relative strength. And shifting gears a little bit on that note, one of our favorite tools that we use to identify comprehensive views of short, intermediate, and long-term strength and weakness is the asset class group score tool, which is found under asset allocation. And this is going to be looking at all of the different asset classes that we survey publicly, 135 in total, across all global asset classes that are going to be including their mutual fund and ETF constituents. So we take their respective fund scores of all of those constituents, we aggregate them together, and then we rank the group accordingly. And, just as a quick reminder, that fund score, which ranges from 0 to 6, 6 being the best, a 3 or better is acceptable. A 4 or better is considered optimal. And it really is a comprehensive reading of absolute and relative strength. So trend movement and comparison against other asset classes. And so this is really helpful, Ian, when we come in here and we can get a lay of the land, so to speak, in identifying, of course, what is strong and what is worth avoiding. And, just from a macro perspective, two of the major groups that we come in here to watch for and we will communicate to you all, the importance of are the S&P 500 index funds group, or what we refer to as the U.S. equity core, as well as money market. We want to see how those two groups fare to get an accurate reading of where risk-taking is occurring in the market, right? And with today's reading, we had the S&P 500 index funds group that is scoring in the top blue section, or an optimal rating of 4.18, giving it the 18th overall rank, which is the equivalent of an 88% U.S. equity core percentile rank. So that group is outranking 88% of other asset classes. And that is generally a bullish posture, right, Ian? We want to see that in elevated levels as it is today. We saw it get in the mid-90s a couple weeks ago, has fallen back a little bit, but still positive score direction here over the last 6 months, generally favorable score, actionable from an OBOS perspective. So the bottom line is large cap domestic equities continuing to show near and long-term strength.
Absolutely. And you mentioned there, we've seen the score for the S&P 500 index funds, or at least a percentile rank there, looking at that U.S. equity core percent rank, as Eric mentioned, retreat a little bit over the past couple of weeks. And part of that is not necessarily by nature of some of the cash, like Eric mentioned, the money market percentile rank is the other percentile rank that we look at here that functions as some cash triggers for some models that we have on the platform. The money market percentile rank has moved up a little bit, moving back about 30% over the past couple of weeks here, but still in relatively low field position with the U.S. money market group as a whole, with an average score 2.57, so well beneath most of the groups that we have here on the platform. But we still have seen that core equity percent rank fall off a little bit, and that's by nature of some interesting groups that we see coming into the top end of the group score rankings. By an initial view, we see that there are quite a few groups with an average score above 4.0, putting us in that blue sky territory, as we affectionately call it here on the Nasdaq Dorsey Wright platform. And interestingly enough, a fair amount of those groups are coming from the fixed income side of things. Now, some of those are going to be looking at corporate bonds, but then we also see some other areas, such as your inflation protection group, which is scoring very high. Actually, the highest average score that it has ever had, with an average score of 4.70. if you can look at the history of that respective group and see that it's actually moved to that level, with movement earlier this week, jumping pretty significantly there, and had not moved above the 4.5 score threshold in the history that we have for the group dating back to the beginning of 2011. So definitely some fairly consistent strength that we're seeing there for that inflation protected area, as inflation continues to be kind of one of the kind of background concerns underlying a lot of movement that we see going on here in the market. So definitely an interesting point to come in and take note of. And there are a couple variety of different areas that you can use to try to play that rise in inflation that we can see, or at least have the potential for further here. One in particular that Eric had highlighted before we hopped on here was looking at the Treasury and inflation protected security there, ticker TIP, coming from iShares.
Yeah, Ian, and this is accessible in group scores by clicking that ideas column to the left of the name. If you ever come up with something that looks good on the group score page, you can really quickly find an idea there, as that column would suggest. But when we look at TIP, with today's action, moving to test an all-time high at 123, for our third consecutive buy signal as it stands, up about 5.5% on a year-to-date basis, and that fund score of 5.02, just a testament to the observation we made from the broader group, right? And that very, very strong showing on the back of a robust score direction of 2.52 in this case. So significant improvement over the bottom score that we've seen over the last 6-month period. We had weekly momentum flip positive here recently. And despite the strength, Ian, this fund still remains actionable from an OBOS perspective. So, and coincidentally enough, look, we had a bullish triangle there at 122.50. So it ties in perfectly with what we were looking at earlier on the pattern side. But very actionable. Support at 120.50 as well support at 120.50 and 120 on that default trend chart. So definitely an area in the fixed income market to keep in mind as we see rotation and leadership still play out within that area, right? We've had a lot of moves to risk on, to risk off, to inflation protected, to not over the past few months. So identifying the strength using the fund score is crucial as we still, emerge through this COVID-19 virus, really, impact and continued impact, right? It's been, we're not quite out of the woods yet, as evidenced by the strength of fixed income on a relative basis. Domestic equities, by and large, remaining strong and actionable overall, especially with the large cap growth theme in mind. But your fixed income allocation is very important now, as it always is, right? And so it's very important, again, to come back and be able to identify where the leaders are in that space as well. So with that, Ian, I think we've about covered it for today. For you all at home listening or watching the YouTube version of this podcast, if you have any questions regarding anything we talked about today or anything that relates to your investment process and you just want to get our opinion on, feel free to reach out to us by phone at 804-320-8511 or via email at dwa@dorseywright.com. Until next time, we hope everyone has a safe and happy weekend. Take care.